Lily, get this. Areas along the future Metro Blue Line are already showing 23% average rental growth. And here's the kicker. The line doesn't even open until 2029.
That's incredible, Daniel. It perfectly illustrates our topic today. How major infrastructure projects are reshaping Dubai property values right now in 2026. Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market, brought to you by Parag Kundalwal, founder and CEO of Consultaa, a Dubai-based real estate consulting and global capital advisory firm. Today is Wednesday, January 7th, 2026.
And on today's episode, infrastructure impact on property values. We're analyzing the ripple effects of the Metro Blue Line, the huge Al Maktoum Airport expansion, and how you can strategically position yourself for this infrastructure-driven growth.
Let's start with that Metro Blue Line. It's truly one of the most significant projects on the board right now. We're talking about a 30-kilometre line with 14 stations, crucially connecting the existing red and green lines.
And the opening date is set, September 9, 2029. It's designed to serve about 1 million residents by 2040, providing a direct 20-minute journey to Dubai International Airport for many.
The economic impact projections are staggering, Daniel. A 56.5 billion by 2040. As for progress, it's already around 30% complete as we speak, so it's very much on track for that 2029 opening.
So which areas are getting this massive connectivity boost? We're looking at key residential and commercial hubs like Ras Al Khor, Al Warqa, Mirdif, Creek Harbour, Silicon Oasis, Academic City, and International City.
Exactly. And this brings us to the crucial property impact timeline. Historically, we see values start rising about 3 to 5 years before a major infrastructure project opens. The peak appreciation then happens in the 1 to 2 years just before it launches and continues through the first year of operation.
Which means we are right in that sweet spot. 2026 is squarely in that initial appreciation window. So, let's break down the growth data in those affected areas.
Let's. Ras Al Khor is a prime example, already recording that 23% rental growth we mentioned. It benefits from a future Blue Line station and the ongoing Dubai Creek redevelopment. Entry points are currently around 1.2 million, with yields of 6 to 7%.
Academic City and Silicon Oasis are also showing that same 23% rental growth. For Academic City, you have a confirmed metro station in a university zone with built-in tenant demand. Entry points start from AED 800,000, with fantastic 7–8% yields.
And Silicon Oasis combines that new metro connectivity with its status as an established tech hub. Entry there is even more accessible, from AED 700,000, also hitting those 7 to 8% yields.
What about some of the other key areas? Creek Harbour is an interesting one. It's being positioned as Downtown 2.0, with premium waterfront living plus metro access. We're forecasting 10 to 15% appreciation potential there.
And you have established family-focused communities like Mirdif finally getting metro connectivity, which is a huge deal. For budget-conscious investors, International City will offer direct metro access with entry points as low as AED 500,000 and yields that can push 8 to 9%.
So the timing is key. Purchasing in 2026 means you capture 3 years of pre-opening appreciation, plus that spike when the line actually opens. It's a clear strategic window.
Absolutely. Now let's shift from the metro to the skies. The Al Maktoum International Airport expansion is Dubai's long-term aviation strategy, and it's a game changer.
A game changer is an understatement. Phase 1 is slated for completion between 2030 and 2032, with a capacity of up to 150 million passengers annually. The ultimate goal is 260 million passengers, making it the largest airport in the world.
And all operations are scheduled to transfer from Dubai International Airport around 2034. Construction is already underway on the passenger terminals, so this is very real. The impact on the surrounding area, Dubai South, will be immense.
We're already seeing major developers like Emaar, Damak, and Nakheel very active there. Entry points for apartments start around AED 800,000, with projected yields of 7 to 8% after handover. The real story here is the appreciation potential, 15 to 20% through the completion of Phase 1.
And just like with the metro, timing is everything. A 2026 purchase captures that 4 to 6 year pre-completion appreciation runway. The proximity to what will be the world's busiest airport will drive incredible residential and commercial demand.
Speaking of futuristic transport, we have to mention the flying taxi network, which is launching in the first half of this year, 2026.
That's right. The first vertiports are located at Dubai International Airport, Dubai Marina, Palm Jumeirah, and downtown Dubai. This has a direct impact on the premium property segment.
Think about the time savings. A trip from Dubai Marina to downtown could be cut to just 10-12 minutes versus 25-30 minutes by car. Proximity to a vertiport will become a new premium amenity.
So, for investors in the luxury market, properties within a 2 to 3 kilometre radius of these vertiports will gain a significant connectivity advantage. It's another layer to consider.
Okay, let's tie this all together into an investment strategy. We've established that the optimal entry point is 3 to 5 years before a project opens. That puts us squarely in the prime window for both the metro and the airport.
So, for 2026, the focus areas are clear. Along the Metro Blue Line corridor, Ras Al Khor, Academic City, and Silicon Oasis. That 23% rental growth already shows the demand is there.
And in Dubai South, for the airport expansion proximity, with that 15-20% appreciation potential through 2032. Don't forget Creek Harbour, with its powerful combination of waterfront living and metro access.
In terms of a portfolio, we'd suggest allocating 30 to 40% to these infrastructure-linked properties for a strong long-term growth component. And investors can leverage off-plan payment plans like 10, 70, 20, or 60, 40 to capture appreciation during construction with deferred payments.
It's that classic ready versus off-plan decision. A ready property in the metro corridor gives you immediate rental income at 7 to 8% yields plus appreciation. Off-plan in Dubai South offers more payment flexibility while you ride the appreciation wave during construction.
Of course, we have to talk about the risks. No investment is without them. Infrastructure delays are always a possibility, though the RTA and airport authorities have stable timelines right now.
There's also oversupply risk, with around 64,000 units expected to be delivered in 2026. This is why it's critical to focus on these infrastructure-linked locations where demand is proven and growing, not just speculative.
And investors need patience. The peak appreciation is closer to the opening, so early buyers need a slightly longer holding period. But as we've seen, the rental demand validation is already happening, which is a very strong sign.
Right. So, to wrap up with the key takeaways for today. First, the Metro Blue Line opens in September 2029, and key areas are already showing 23% rental growth years in advance.
Focus on Ras Al Khor, Academic City, and Silicon Oasis for strong yields and appreciation. Second, Al Maktoum Airport's Phase 1 completes around 2030-2032, giving Dubai South a 15 to 20% appreciation potential.
Third, the strategic timing is now. 2026 purchases capture that crucial 3 to 5 year pre-opening window. And finally, consider allocating 30 to 40% of your portfolio to these infrastructure-linked assets for long-term growth.
That's today's Dubai Daily. Infrastructure-driven investment requires patience, but it offers substantial, predictable long-term returns. The Metro Blue Line and the airport expansion represent Dubai's unwavering commitment to world-class connectivity, which underpins the entire property market. For a personalised infrastructure investment strategy and to explore exclusive property opportunities in these growth corridors, reach out to me, Parag Kundalwal, at Consultaa. You can contact me via phone and WhatsApp at +971 58 59 64 631. Email me at parag@consultaadxb.com. Visit our website at consultaadxb.com. You can also connect with me on LinkedIn under Parag Kundalwal and follow us on Instagram at consult-tar-now. Dubai Daily airs Monday to Friday at 7 a.m. Dubai time. Subscribe for your daily dose of Dubai real estate intelligence.